Major banks in Hong Kong are keeping their prime rate unchanged, despite another rate hike by the Monetary Authority and the U.S. Federal Reserve. But Hong Kong's de facto central bank warned against hopes that the upward rate cycle has ended.
In a surprise move, major local banks are keeping their best lending rate unchanged, although the Hong Kong Monetary Authority raised its base rate by 25 basis points. The city's de facto central bank acted just hours after the U.S. Federal Reserve lifted its benchmark rate by the same margin. The prime rate for Hong Kong's largest bank HSBC and other lenders remains at 5.625%, providing some much-needed respite for home owners. In September, November and December, local banks responded to a U.S. rate hike by raising their best lending rate. The latest increase in the federal funds rate was tapered to 25 basis points, in what could be a signal that the tightening policy is coming to an end.
Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation.
The Hong Kong Monetary Authority's base rate, now at 5%, is the highest in 15 years. Those with mortgages were given another warning.
The rate hike cycle in the U.S. has not yet been completed. The Hong Kong dollar interbank rates might remain at elevated levels for some time. So the public should be prepared for the likelihood that banks' lending rates may go further higher.
But Yi insisted those who took out home loans in recent years had passed stringent credit checks and income requirements, and bad debts were extremely rare.